Anyone who says they can't time the market or you can't time the market is just marketing to you. If I had a financial advisor who was telling me you can't time the market, I would start looking for another financial advisor. I remember once I was at a broking house and the market was collapsing in the GFC, and I wrote weekend articles in the Fairfax Press. So I think it was in the Sydney Morning Herald and the Age, and I had written, anyone who says you can't time the market is a bloody idiot. And the next morning, the next Monday, and he was probably the top trader on the floor, came smashing down the corridor in an open plan office with 200 people going, "What did you write on Saturday?" And he had sent an email out to all his clients on the Friday before saying, "Don't worry, you can't time the market, it's all long term." And I would say anyone who suggests you can't time the market is copping out, because if you can't time the market, what are we all doing here? The days of Warren Buffett-esque investment where you read The Intelligent Investor and buy a stock forever are, I'm afraid, gone. Yes, you can do that, but the demands now, especially for fund managers in a very competitive industry, is to be more active than that. So I would say you do have to time the market. We do attempt to time the market. Our process for that is we have a investment committee meeting every morning. Top of the agenda every day is our cash versus equities discussion. Most of the time we are fully invested, and that's our job. We're supposed to invest. Occasionally you get these precipitous moments, and as a team we will make a decision when they are, which is how we did the pandemic. I remember one of my colleagues just saying, "Go for it," because we had to. You have to make these decisions precipitously, not knowing the future. They're hard to make. You have to be decisive, and usually a committee isn't decisive, but we were decisive. So we've trained ourselves to spot these moments. We hope to do it again. It's the only time we can massively outperform is when we're in cash, when the market's collapsing. We look forward to the next one. Let's just hope we get it right again. You don't have to worry about it. And that is something that I think everyone needs to learn at the private investor level, is stop worrying about the market falling over, because nobody knew, not the kings and queens, central bankers, brokers, financial planners, taxi drivers, no one knew the GFC was going to happen before it happened. There were a couple of people in the Big Short who thought they knew and did. But people don't know what the future is going to be, and you can't know in advance that the market was going to drop 30% odd in 25 days in 2020. You just can't know. So my advice is to relax, work on your golf handicap until you see the stock market on the front page of the tabloid newspapers. You know everything's fine. And when it does, react. And that's the skillful bit. It is being assertive and decisive enough to believe that investment isn't forever. It's not about buying stocks and holding them for 10 years. It's about making money on any time frame you can. And that involves at some point in the market being decisive, and so many people aren't decisive. So stop fearing a crash, wait for it, don't predict it, react to it. Read the Marcus Today newsletter. It's all we're writing about half the time is our cash versus equities decision at the time, our strategy. And you can make your own mind up, but you don't need to fear it whilst it's not happening. So at the moment we've got a very nice, comfortable bull market. When you wake up to find Wall Street down 5%, have a think about it.